Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern U.S. time. Thanks for joining me today for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, yesterday's Trader Bite was done on Facebook. That was probably not a good thing, but YouTube is down. Facebook does not allow you to go back and start from the beginning. It streams live only until the video is processed afterwards. So not a very good platform for this. But in any case, just wanted to get the video out there. Later, I uploaded it to YouTube for the continuation of the archive in there. As far as the markets this morning, the overall market stance is bearish. Looks like money's moving to safety a little bit this morning. Crude oil leading the pack at $47. $47.05, up 1.8%. Crude was selling off yesterday. It sold off from a high of 46.88 down to a low of 45.97. And it picked right back up on news this morning that Saudi Arabia may unilaterally cut supply by 1 million barrels per day to offset Nigeria and Libya exceeding the agreed upon amounts. So that's pushing crude higher by almost a point and a half, over a point and a half, 1.5%, followed by the Euro FX for September. And the dollar's taken a bit of a beating this morning. And most of what is green are safety assets like gold. The bonds are up, the 10-year notes up, the Bund is up. Just slightly. The DAX leading the pack down. The DAX is down 1.45%, 183 points off, followed by the Euro Stoxx down 41 points, 1.17%. So overall, looking kind of bearish today on the Globex session. We'll see how that carries over going forward. As far as the news flow, one of the we're in earnings season. And we had Bank of America release this morning, came in at 46 versus 43 cents. But also Goldman Sachs came in and it beat at $3.95 versus $3.51 on 7.89 billion in revenue, also beating on that end. But it says that its bond desk revenues are down 40%. The stock took a bit of a tumble following that news there. We also got Johnson & Johnson came in at $1.33 versus $1.79, another Dow component. And then United Healthcare came in strong at 246 versus 238 at 50.1 billion in revenue in line. So overall, and then yesterday, those of you who stuck around, you probably saw that Netflix reported 15 cents versus 16 estimated. It beat on revenues at 278 versus 276. But the good news, and I think the stock popped like 8% overnight or something. The good news is that they exceeded their Q3 estimates for viewership. Q3 total streaming net adds at 4.4 million, which shows a strong return of subscribers. Okay. Other than that, if I'll show you in a minute the spaghetti chart that I use for the cash indices, but we have weakness in the healthcare, biotech sector because it looks like the healthcare bill from the Senate, the Republican healthcare bill, is failing to pass and maybe scrapped. So it was supposed to be released last Thursday. And then that was delayed, and then it was supposed to come out yesterday, and that was delayed due to a senator going through surgery, and it's a bit messy in there, and that's a big thing that needs the U.S. government needs to get over in order to move on to the more important bill for the market, which is the tax reform bill that was promised. So those are how things are shaping up. As far as what we've got today on deck, let's see. I apologize. 1 second. Today, this morning we got U.S. import prices at 10 o'clock Eastern. We get NAHB Housing Market Index for July expecting 67.0. Total net tick flows are expected at 4. Those are a low importance figure. NAHB is also, um, but overall, there's not much on the calendar. We did get a lot of numbers overnight. The UK released its CPI, PPI, and RPI, and the Germans released their zoo survey expectations. So there's a fair amount of news flow that has already happened. I don't see too much moving forward other than chatter potentially about the healthcare bill and so on. Let's move on to the next step in the process here and look at what we expected yesterday. Yesterday, the expectation was for the market to take a break and potentially test lower. I expected it to test down into this 2451.50 area, the former all-time high, and the low volume node left behind. So that was hypo 1. Check, check up, and then the bigger moves are down, and then hold in the middle, end up with a balance profile at the low volume node. That's the primary expectation. Didn't quite happen that way. Secondary, we start to shift down. We start to the late longs start to liquidate, and then looking for an impulse up, followed by larger rotations up, make a higher high by just a point or so, and then rest right back at in the 2456 area, forming another P-shaped profile to keep this rally kind of alive. Here's what actually happened. Pretty much nothing. Um, the overall market was really dead. The opening swing was quite small, relatively small, just 2 points, and then the market just stayed on top of that opening swing throughout the session. Finished at 24.59 on top of the point of control. A completely Gaussian and compressed profile. With a very legitimate value area, very tight. So the expectation is a strong move up or down from here to likely to ensue. We're building on the high volume node left behind from Friday. So yesterday was a rest day. Check out this volume, this day session volume at 710,000. That is 400,000 contracts lower. So we traded yesterday very much like a holiday. The range yesterday was also really pitiful, just 6.25 points on the pit session, 6.25 points, very poor. The delta, surprisingly, pretty strong. Going into the close, the delta almost reached 40,000. That's outstanding for such low volume and such a tight range. Here's what things look like historically. It's important to keep checking on the day session. This is the regular trading hour day session chart. Each bar represents 1 day of trading. And this tracks what we've done from day session to day session. And you can see we're in a pretty steady climb here. But overall, the market hasn't really accomplished very much in the last couple of days, other than to push new highs. And you can see yesterday, if you look at this portion of the profile right here, we're starting to build out the high volume node there. But overall, this entire section beyond the gap can now be looked at as a contiguous portion of the profile, and we're likely to test these levels on the way down, and that's my expectation for today. The other thing to note from the chart, excuse me, the range yesterday, as I said, 6.25 points. The low of what we would consider normal is 6 points. You see it, value 70%, 6 points. That's the low side. What we would consider normal on the high side is value high at 22. The mode is the most common daily range. Hang on, let me just turn on my news. The node is the most common daily range at 10 points. Yesterday was clearly below what we've had in the last month or so. Um, in the last month or so in range. So this is range and this is volume. Volume wise, we just keep dropping off. Yesterday's volume was pretty poor, came in at 710,910. The low end of volume of what we would consider to be first standard deviation volume on the low end is 750,000. We were below that. The most common is 105,000. So we were approximately 400,000 um, 400,000 contracts below what we would call normal. So about what is that? A little under 40% below. So not much participation yesterday, although when they did participate, they participated on the buy side. This morning we have a squeeze on the longs. So we're done with this. Looking at this morning's action, we have a squeeze on the longs. The overnight session did some pretty good testing. It continued higher off of the run up on the close and tested below, held steady until the European Open. Once the European Open market opened, it pushed to that prior high it put in the overnight at 60.75, lower high at 60.50, and then it just gave it all up. Goldman Sachs came out right here, and then the market has followed through to the downside since then and has been pushing lows until just now. So overall, the market looks like it held steady in here for a while. Oh, it held steady in this area for a while and has now started to spill down a little bit from there. So this is interesting to watch. My expectation is for the market to explore lower coming into this session. A couple things I wanted to show you, and I know this is a little bit long because I wanted to cover this yesterday but could not as I didn't have time. But this is a chart of the VIX. This is something that's being talked about quite a bit now. This is a chart of the VIX daily. This is a daily VIX chart, and you can see that we're in this just absolute compression. We're pushing against um, multi-year lows on the VIX. The market is not pricing um, insurance on stocks in the form of options very high. So premiums are very, very low and consolidating. And so this, traditionally, this would show complacency by the market, which we then expect traditionally that the market is likely to catch a surprise coming out of here that would push the VIX back up above 15. But overall, it just keeps making lower highs and lower highs and getting squeezed lower and lower and lower. As you saw with the chart that I posted the other day, I think it was yesterday, we also see that on the weekly range that it's just compressing down from 55 points down to 33 points currently on the median. So that's that. That's all I wanted to cover with you today. To get into the hypotheses this morning, I expect the overall. One thing I wanted to note: the overall market inventory is short. There's a prior day's close. This is where we are, and in price and in delta. So we have inventory being short, more short this morning. So the expectation this morning is that we are likely to have an open auction out of range. This might recover a little bit and get back in range. Attempt to push into the prior day's range. I expect it to fail around value low, and I'm looking for it to test 24, 51.50 and 24.50 for a small bounce, and then it's likely to test again into the lower point of control before it comes back and finishes the day somewhere in this low volume node. And then today we might get that high volume node right at the LVN left behind on Friday. So this is hypo 1, test higher, the impulse down, look for a choppy trade but a continuation eventually downwards, and then a bounce back up on the close. This is the key expectation for today. If we get an initial move lower that gets supported, so we test that 50, 150, 50 area, and then we get a higher low and some and good support below, then I expect it to test value low, consolidate, and then come back into 58.50 before it finishes back in the prior day's range. So we're likely to end up with a double distribution profile by the end of the day, a small one. That's hypo 2. Okay, the the market could not sell off when the European markets were selling hard. It sold off a little bit, but it just doesn't have it in it to sell for very long. But we do have a lot to work on below. So if I extend this profile into what's happened so far, and we look at what areas we could trade below, you'll see um, some really clear separation points on the profile, on the composite, where the low volume nodes and high volume nodes are um, are clearly delineated in this profile. So I'm looking for this to move from the upper distribution, test the lower distribution, and then hold. And then the next day, I'm looking for it to break into the lower distribution and hold the middle distribution, and then eventually break into the lower distribution and trade the lower distribution before we start moving into the gap zone. So this might take another week to accomplish given the current volatility, but this is what I expect. I'm not expecting the market to push higher from here, although it could push by a point or two, but I'm not expecting another run for the high. It's already here. That doesn't appear to me to be a lot of fuel for another leg up just yet. Now, all of that can be changed by, whatever the earnings season shows, but this is what I'm expecting for now. I know it's a lot to digest, but just take it as it is. See if it matches your plan. Make sure you trade what you expect of the market, and make sure you have multiple plans for how you're going to react or respond to whatever the market does. Hopefully, this was something useful to you. Good luck today, and I'll catch you tomorrow. Take care.